Good morning, everyone. So I'm going to look at adding an earnings trade to the start to finish series this morning. This is going to be an earnings trade in eBay. Now, eBay announces earnings next week on the 7th. We can see that the implied volatility here is much, much higher than the historical volatility. Now, we're going to look at what that means in a moment when we get over to optionstrat here and we start looking at pricing. So even though this is a little bit of an oddity, even though the earnings are taking place next week on the 7th, for whatever reason, I'm finding better pricing on this earnings calendar out with the 17th option. So this trade is, and I did just get a fill on this, so I traded this personally. I got my fill at 6 cents, not 5 cents. Still an incredibly cheap trade with a great reward to risk ratio. So let's just look and see what happens if I change this and I go a week earlier and I come into the 10th. Again, earnings are on the 7th. So if I come into the 10th here and then I move this one a week earlier as well, just so there's a week's difference between them, excuse me. So we're looking at around 8 cents. So nothing wrong with that. Perfectly good trade. For whatever reason, again, a little bit of an anomaly here. If I come out further out to that 17th date, and then of course this one needs to go back to the 24th, when I end up in that spread, it's cheaper yet. So what I'm going to do here is, because, no, let's see, let me link these together. If I were to do a 10 lot on these, my maximum risk in the trade is $50 if I get filled at a nickel. Again, I'm suspecting that, well, I know from experience that my actual fill was 6 cents. If I let that shop, if I let it sit there for the day, maybe I'd get filled at a nickel. But I just went ahead and paid up to the ask in this case, which was 6 cents. Therefore, for a 10 lot, I've got $60 in risk in this trade. Now, what we're looking at here, what's kind of interesting about this is specifically, we're looking at the long strikes are $1.67 to $1.70 right in there. Mid-price $1.69. So we're going to have to pay $1.69, but these shorts that we're selling right now, they're trading for between $1.62 and $1.65. So nice, tight bid-ask spread, which is why I was able to get filled so close to what it looks like I would get filled at here. So I'm going to go ahead and basically save this as a saved trade. Again, I really like calendars and diagonals, specifically around earnings, and it is because of this great reward to risk ratio that you can sometimes get in these trades. The key, the thing everyone has to be careful of with a calendar and diagonal is do not let the front period expire, the 17th. Do not let that thing expire, leaving just the long put on the other side. Unless it's far out of the money, then it doesn't matter. But if this is in the money, you have obligations. You need to be careful with this. Usually the general rule in a calendar is when you close your front strike, unless you know exactly what you're doing, don't leave the back strike open. Just close the whole thing at once. So the goal on this trade, this is not going to move around much until after earnings next week. So after earnings, if this were to happen, let me just save this trade. Let's see, I'll just say I opened this on 11/1/23, and I'm going to say for a nickel, because I'm pretty sure I would be able to get that filled if I just let that set there for a nickel. Again, I live filled at 6 cents and just paid up to do that. So just going to save that. I will copy the link, share the link with everyone. But what I'm looking to have happen now, of course, is after the earnings announcement next week, this strike here, the November 17th, the hope or the expectation is going to be that some volatility will drop out of that. More volatility, hopefully, will drop out of that front one than drops out of the back one. It will drop out of both of them, to be clear. But even if it fully dropped out of both of them, again, my max loss is a nickel per. So that's why I like the concept of this trade. I could end up losing $60 on this, but I like the risk reward, and this is where I'd like to take my shot. So we'll see how this pans out. Again, won't really be much to do with this between now and the earnings announcement next week. I may leave an order out there at 4 cents possibly and add to it. Right now I've got on a put spread. Maybe I'll put out a call calendar maybe at 40 and kind of bracket this thing in. Put a call calendar out there at 40, maybe at a nickel, 4 cents, something like that. See if that gets filled. But for right now, the start to finish trade is simply going to be this as it exists right here. So that's it for now, everyone. Thanks so much, and we'll see how this plays out in about a week.